Hello, traders. Cousin Benny coming to you from theclosingprint.com, March the 10th, 2024. In this edition of your weekend video newsletter, we'll discuss the markets which appear to be consolidating at all-time highs, with support solid at 5,100. Most of our indicators are still bullish, with 5 neutral and 5 bearish. With the dollar and the 10-year weakness, bulls have an opportunity to reduce risk into this week's triple witching OPEX on Friday. S&P 500 hit a new all-time high on Friday at 5189, just shy of the 5200 resistance, and reversed rather dramatically. Support at 5100 holding at the end of the day with a small bounce into the close. With most indicators embedded at highs, we could see a fade back to a more neutral level going into OPEX on Friday. So for now, we're looking at a risk-off situation on Monday unless something changes after that non-farm payroll printed a hotter than usual number and considered somewhat bearish in the short term. That said, odds are for a June hike have been increasing. Together with the weakness we saw in the S&P 500, NASDAQ was also off 1.55% for the week, closing on a bearish engulfing candle right above the 21-day. Short-term traders should consider reducing their risk into this Friday triple witching, while at the same time we have more of a neutral signal from the New York Stock Exchange. Continues this trend, 921.50, 200-day all pointing up and to the right. RSI is above 70, yet giving us an opportunity with its strength to reduce our risk this week. So we'll consider tightening our stops on open positions and watch how the market opens on Monday. Dow Industrials have been fading over the last couple of weeks. We're sitting on the 21-day moving average with potential to come down to the 50-day or even a bit below that if we do start to see some selling. Remember, this is only 30 stocks, but Apple being one of them, we really need to see some early strength on Monday if we aren't to see a resumption of this trend to start the week. Finally, we have the Russell 2000 IWM. Showed a bit more strength, still closed on a bearish engulfing candle, trending at highs. Did show mostly relative strength in 7 of 9 of the small cap sectors, rising with strength noted in small cap financials, the symbol PSCF on stock charts, small cap industrials, symbol PSCI, also showing strength with a doji to finish the week. In addition to materials, symbol PSCM at highs, energy turning the corner over the last 4 weeks, and small cap healthcare giving us reason to think that we could see this trend continued and perhaps see some strength and rotation into small caps this week. Breadth improved last week, even though we did have that pullback on Friday, with all of the indicators above zero for the S&P 500, mid caps, small caps, and NASDAQ from top to bottom. And the McClellan oscillator still very bullish, so there's most likely going to be some rotation this week. You can see that NYSE, the summation index, is turned up and to the right. Plenty of room to the upside, suggesting the momentum could continue. We had advanced decline in the lower panel, making a new high, though the new highs, new lows did show a red stick on Friday. Most likely a little bit of profit taking, but the black line continues to make higher highs and higher lows, leaving us with a setup where volatility will most likely push higher. When this is red, look for VIX to start moving higher. It's possible that we could see weakness persist into Monday, Tuesday, so watch for lower highs and lower lows, especially if we start to see VIX turn higher. A condition we'll be watching for this week. Keep an eye on the VIX. The 10-year did back off last week, dropping below all of the major moving averages, 50 and 200-day, just overhead. Momentum has been bearish. We are oversold on stochastics, so a bounce back to the 200-day would not be unusual, though we are looking for potential triple bottom, with the odds of a rate hike increasing to 96% going into June. So we'll be watching very closely for a continuation with the 10-year. That would be bullish for equities, despite the weakness that we saw on Friday. Additional indicators with junk bonds and high-yield corporate debt moving higher, though gradual. We did have a shooting star on Friday, mostly neutral to bullish at this point, with IWM and IBB both moving higher to slightly sideways. These are neutral to bullish as well. With Bitcoin at highs, that's assisting with the risk-on signal. Advanced decline also moving higher. And again, the 10-year dropping, which is bullish for equities, despite the weakness on Friday. We also had weakness in the US dollar, again, assisting equity markets with a move lower, not only for the US, but also internationally, with strength noted in emerging markets. Countries that borrow in U.S. debt against their local currencies will have an easier time of it. As a consequence, we do see some rotation into international markets, with the ACWI All World Index ex US continues a bullish trend. So if we do see weakness in the dollar in the 10-year this week, that would be a more bullish signal for equity traders. Commodities are also neutral. This is the Deutsche Bank Commodity Tracking Fund, looking for this sideways price action in this weekly time frame to continue, which would be bullish for equities as well, applying mostly to longer-term 401k investors. When this indicator, the ratio between the S&P 500 and the CRB index, commodities, rises, that's telling you equities are in favor. So look for weakness in the commodities to persist. Additional indicators for bulls, especially if you're in the gold trade. S&P 500 is still outperforming gold, and we've recently crossed over. So this crossover, like we saw back in 2021, is indicative of bullish action to follow, despite the weakness that we saw on Friday. Strength in gold is noteworthy, though I wouldn't be chasing at highs. Look for a little dip if you're thinking about adding to gold. At this point, continuing with persistent strength. Finally, the silver lining in crude oil and gasoline products sideways for the last several weeks. So that's less of a headwind for bullish equity traders and a relief for consumers as gasoline hovers near recent prices into March. With breadth improving across sectors, internationally, with fewer red and mostly yellows and lime green. So this is mostly neutral at the present time, with more bullish readings in energy, in real estate, and industrials. Biotechs are looking fine, consolidating just below recent highs. Volume was fine. Real estate rising. Volume indicating institutions have been picking up shares over the last couple of weeks. Congratulations to Jennifer. I think she's been long this sector for the last week and a half. Transports trending, consolidating last week. Still, volume looks pretty good. Oil and equipment services right at the 200-day. Look for this to follow through when RSI, stochastics, and MACD are rising. Materials could consolidate a bit and pull back. Freeport-McMoRan was strong in the middle of the week, managing to push back above the 200-day and the 50-day to end. With volume picking up, MACD, stochastics, and RSI rising, there's potential for this to push back up to 52-week highs. The communications sector, led by Netflix and Meta, Google, consolidating at highs, mostly neutral. And energy finally with a bullish trend over the last several weeks, breaking out of this descending pattern, volume picking up. This could continue. Lack of overhead supply and resistance. We could see lower to mid 90s most likely in the next several weeks. Even financials seeing lots of strength at highs, but not dropping off. Keep an eye on the strength in financials. Noteworthy was American Express last week, closing at all-time highs, 52-week highs, and very bullish on the weekly, maybe a bit extended, but volume shows institutions have been picking up shares. American Express, of course, associated with more wealthy clients. Industrials, bullish to neutral. Watch Caterpillar, which my son and I have credit spreads on down here near 310 and looking fine. Technology with obvious profit taking could see some more consolidation back down to the 50-day at 200 a possibility. Consumer staples seeing some volume last week, both defensive in addition with healthcare consolidating near highs, and utilities interest rate sensitive. If the 10-year is going to continue to move lower and the Fed does lower rates, look for these interest sensitive utilities to continue this trend higher. Finally, we have consumer discretionary. That includes retail. Both of those have pulled back last week after showing strength in this cup and handle situation. Looking for this area to hold this support with some consolidation over the last week. Looking for support in this area with the subsector retail showing a bit more strength. Coming back to the breakout level wouldn't be surprising. 21-day looks like it could get tested this week. A little bit of exiting volume there, with most sectors neutral and defensive sectors at highs. I would say makes more sense to reduce your risk if you're a short-term trader, while those with investing time frames have the longer-term trend in their favor. This week, IBD 50, we have a little over a dozen names that look pretty strong. Clean Spark following through off the bounce at the 21-day. On Tuesday, Wednesday, volume picked up. Stochastics and MACD turning from the reset level at 20. MACD turning up and RSI above 50 and rising. Clean Spark, of course, in its most recent report on February the 8th, beat expectations, with earnings growth noteworthy at 95.7 and revenue growth 165%. Look for Clean Spark to follow through. Noteworthy as a clean Bitcoin mining company focused on solving the modern energy challenges. All they need now is something related to AI in their description to catapult them to new highs. Watch Clean Spark this week for potential follow-through. Salesforce, it's just off of all-time highs. A little consolidation last week. IoT, Samsara with volume and a pop on earnings. The company reporting in-line expectations with earnings growing at 300% and revenue growing at 46%. Connected cloud, Internet of Things, AI. KKR Asset Managers did miss in its recent report, but earnings are growing at 16% and revenues growing at 75%. Trending at highs. Keep an eye on this one, again, on the IBD 50 for another week. Meta on the IBD 50, 9, 21, 50, 200-day, all pointing up and to the right. A little bit of profit taking on Friday. We'll see if this one follows through this week, but it's definitely bullish, providing a dividend for the first time and trading at all-time highs. Travel and leisure related names, cruise lines, hotels, airlines, all grinding higher, trading at 52-week highs, with Ryanair, Stochastics rising, MACD crossing, RSI above 50, and Royal Caribbean showing volume over the last week, trying to break out to new highs. The weekly shows a bullish trend above the 10 EMA weekly, higher highs and higher lows. Did we get on a higher high this week? Keep an eye on Royal Caribbean. Recently reporting on February the 1st, 200% earnings growth, 27%, and revenue growth. You know what the company does. Looking for Royal Caribbean to continue higher. I believe acceleration is in this one. Tidewater beating estimates in recent reports, bouncing off the 9 EMA area. Look for a follow through this week. Stochastics MACD, neutral for the most part. RSI rising with the company beating on February 29th. Earnings growth of over 200% and over 62% in revenue growth. Company providing offshore services, vessels, marine support services. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, March the 10th, 2024. Note the 10 bullish indicators, 5 neutral and 5 bearish going into the week. I'm more neutral until we see how options set up going into Friday and also into next week. So reduce your risk. Probably not a bad idea. I'll send out a watch list around 12 o'clock midnight on the East Coast, around 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, enjoy the rest of your weekend. Take care, and we'll see you then. Ciao.